Welcome to the Wealth Matters podcast, where investors come together to better understand how to build passive cash flow and create generational wealth without all the confusing mumbo-jumbo. Here's your host and co-author of Amazon #1 bestseller, Alpesh Parmar.
Welcome to the Monday section of Wealth Matters podcast. We have been talking a lot about crypto lately, so I changed gears for last couple of episodes. We have spoken about rally. In this episode, I want to talk about, we have also spoken about, or the episode will come out for Masterworks. I want to talk about the crowdfunding platforms today. Crowdfunding is how you can invest in startups and a lot of businesses. So most of the time, or actually a lot of the time, I have only done equity crowdfunding. Equity crowdfunding is where you receive an ownership stake in the early stage or late stage companies that have growth potential, and your gains depend on the ups and downs that accompany that startup phase, right? And there are so many equity crowdfunding platforms, like the biggest ones are Republic, WeFunder, Start Engine, Microventures, Seed Invest. And I've gone through a lot of these platforms. You can follow this link above and look at the videos, or if you're listening to me on audio, search for it on Apple Podcasts. I've gone through a lot of these platforms. Actually, I've used most of these platforms which are available on the equity crowdfunding space. We want to talk about debt crowdfunding. That crowdfunding offers an expected fixed return on investment. Basically, you are giving a debt. Equity means you are giving the money to that startup and you are getting percentage share or stocks in that startup. And that for that, you have to wait a lot of time. You don't get paid till that startup pretty much gets acquired, goes IPO, and that stocks or the shares become worth more than you're paid for, or gets merged with another business. So, but in that world, now that you are giving a loan to a business, you depending on how you structure the contract or how they have structured the contract, you may start getting paid as early as next month or maybe a year, but you may get a fixed return. But this way, at least you have some kind of return right away. Of course, it always goes without saying that the higher the risk, higher the reward. That's why equity crowdfunding took off pretty fast. But on the flip side, if you want to diversify, you can also do this, invest via debt crowdfunding and get some fixed return, right? So debt crowdfunding allows you to spread your money over multiple small business investments, right? So this way you can again diversify. You can get fixed return, which is my philosophy always, that I want appreciation, but even more than that, I want passive income stream. So if I'm able to get expected fixed return, then it would be easier for me to know that how much income I'm earning every month. And that's pretty much creating multiple streams of income. So I have not yet done it. So usually when I talk about anything on my platform or podcast, I mentioned that I have tried this out. But I recently found this and I got it started interesting. So I thought, okay, let me record the episode. But I'll be back soon. I'm going to try some of these platforms out. The first platform, it's called SMBX. S as in Sam, M as in Mary, B as in boy, X as in X-ray. SMBX connects investors with growing local businesses that are looking to raise capital. You can invest with a minimum of $10, right? And you don't have to be accredited to get started. So I like this platform because one, it allows you to get in for as low as $10. And second, it does not require you to be accredited investor. An accredited investor means that you have to have income of at least 300,000 if you are married, filing jointly in last couple of years. If you're single earner or filing single, then you need to have income of at least 200,000 in last couple of years. If none of those criteria is matched, then as long as you have a net worth of more than $1 million, then also you will qualify as an accredited investor. And I've mentioned this before as well, that I want to have the same level playing field. So I decided when I have my own fund, when I raise capital, it will not only be for accredited investors, but I'll also allow non-accredited investors to invest with me. Because of that, I'm limited on my deals. And also I can only raise limited capital, because to have non-accredited investors invest with me, I have to make sure I have pre-existing relationship with that particular investor, and I cannot advertise it on social media or even on my platform. So that way, of course, I'm reducing my reach to investors, but also I want to make sure all of you can invest with me. And that's why I will only focus on the deals where non-accredited investors also can benefit. So that's why I like this platform. The platform makes money by charging the business 3.5% of the total funds raised. When you're investing with SMBX, you are purchasing small business bonds in specific businesses that you choose. These bonds are a fixed debt instrument that yields monthly payouts of principal and interest, with annual rates of return ranging from 6% to 10%. So I'm going to try this out soon. I think this is similar to Prosper, and there was another company similar to that. They are not doing the same, but in that one we were giving peer-to-peer loan. Here you are giving the loan to the business. So this is one of the platforms. Second one is called Funding Circle. I've looked into Funding Circle, but it required pretty high minimum, and I'm looking at it again, 25 grand. And it accepts only accredited individual and institutional investors. Of course, I'm an accredited investor, so I could have invested, but I didn't want to put 25 grand in one place. So in this one, when you invest, you are buying interest in business loans that Funding Circle originates. So you are not directly giving money to the business, but you are giving money to Funding Circle, and Funding Circle originates those loans. So you're buying a promissory notes. You collect 100% of your share of the principal and interest minus a servicing fee, and you assume all the risk involved with the investing. Funding Circle's expected returns range from 5 to 7%. So you're paying more and you're getting less return. And I would prefer to try out SMBX. Again, that's just my personal opinion. If you do try out for any of these platforms, please let me know. Funding Circle, though, has an auto invest tool which automatically reinvests your money into small businesses. You can invest like minimum of $500 per fractional note, right? Using auto invest tools. So that sounds pretty interesting. Another one is called MA Invest, May Invest. It provides opportunity for investors to lend money to small brick and mortar businesses. Again, you don't have to be an accredited investor to invest through the platform. So I like that. And you can invest with as little as $100. So again, that's a pretty good way for someone to get started, right? If you just want to check it out, you can get started for as low as $100. If you invest with My Invest, you purchase revenue sharing notes, right? So these are agreements between you and the business that state you will receive a set percentage of the business's future revenue until you receive a full return. So this is pretty interesting. It's depending on the revenue share, right? So on the website, you can browse investment opportunities and learn about each businesses. I think the one thing is interesting. Instead of an interest, you get investment multiple, right? So multiple is set by the business and gets multiplied by your initial investment to determine how much the business owes you by the maturity date. So let's say if you invest $100 and have an investment multiple of 1.5, the business would owe you $150 by maturity. So that's pretty interesting. The other one I was looking is Honeycomb Credit. It again allows you to invest in small businesses. You are purchasing a promissory note for repayment. You don't have to be an accredited investor, and it requires only a minimum of investment of $100, which goes into an escrow until the project gets fully funded. The rate of return varies between 7% to 12%. That's pretty interesting. The businesses make monthly repayments that include interest, assuming no default. I think I'm going to personally try out SMBX and Honeycomb Credit just because of the rate of return and also the monthly interest payments. Each business repays its own loans monthly, and your portion goes into a third-party account. You receive your funds quarterly directly into your bank account using Honeycomb Credit. They do charge, they make money by charging a small percentage-based investor fee of 2.85% and a $250 posting fee for each listing. So that's pretty interesting. The other one I found is called Worthy Bonds, WORTHY BONDS. Pretty much in this one, as the name suggests, we buy bonds to invest in small business. Again, you don't have to be an accredited investor, but you need to be a US resident. So that's good. Also, minimum investment on Worthy Bonds is only $10. So that's pretty good. In exchange of 10, you receive a fixed 5% annual interest, and the bonds have a 36-month term. So that's pretty good, and you can watch your interest go daily, and you are credited weekly. So 5% is not bad. If you just want straight returns, pretty much you are getting 5%. Worthy Bonds doesn't charge investors. Some loans, and the way they make money is that businesses may pay more than 5%. We only receive 5%, and Worthy gives the difference to fund its operations. So the platform does not disclose how much interest they are charging these businesses, but it's worth checking out. So check out this debt crowdfunding platforms. Let me know what you guys think. And I am thinking of trying out SMBX and Honeycomb Credit, and I'll let you guys know how it worked out for me. Thank you so much for watching and listening. Please leave me a rating or review, and subscribe and share with your friends, because sharing is caring. Have a great day, everyone.
Thanks for listening to the Wealth Matters podcast. If you enjoyed it, please leave us a 5-star rating on iTunes so others can enjoy the show too. Have a great week and happy investing!